In this video, we're going to show you the #1 RSI trading strategy that will change everything in your trading. This will be the most important video about RSI indicators you will ever watch online. What's more, we will consider the recent Solana short trade we took using one of the strategies shown in the video. You can use this insanely powerful strategy on different time frames and asset classes, including crypto, forex, options, and stocks. During this video, we also will show you how you can access our top-notch private indicator, known as quantAlgo. This algo tells you when to buy and when to sell, giving you an insane advantage over other traders. Before we move on, if you want to show us your support and speed up the release of a lot of new content, make sure to hit the subscribe button and hit the notifications bell. It's only 2 clicks, but it means a lot to us. So, the video will be structured as follows. And, let's start with the first topic. So, what is the Relative Strength Index? The RSI is a momentum indicator used in technical analysis. The RSI measures the speed and magnitude of a security's recent price changes to evaluate overvalued or undervalued conditions in the price of that security. The RSI is displayed as an oscillator on a scale of 0 to 100. The indicator was developed by J. Wells Wilder Jr. Relative Strength Index is one of the most popular trading indicators among traders. However, it is often used wrongfully. With that, the majority of traders base their trades when the indicator signals overbought or oversold conditions. But this will make you huge losses, as the price can always continue its dominant trend move while being overbought or oversold for a while. Other traders open the trades based on the crossover of the RSI line and the RSI-based MA line. This approach is also not so good, as it generates tons of false signals on the lower time frames. Finally, some traders tend to connect RSI swings with the trend line and enter the trade once the RSI line breaks right through it. But this approach also proved to be ineffective. So, today, you will learn how to use the RSI properly, thus upgrading your trading to the next level. Moving on to the next topic. To add the RSI indicator to your chart, open the Indicators tab, type RSI, and click right here. We remain all settings unchanged, but let's open the Style tab and make the RSI line wider. You can also disable the RSI-based MA line right here. So, when the indicator line crosses above the 70 level, the price is set to be overbought, indicating a possible reversal to the downside. At the same time, when the indicator line crosses below the 30 level, the price is oversold, indicating a possible reversal to the upside. Moreover, we have a fresh bullish momentum when the RSI line is trending up in the range between the 30 and 50 level. As the RSI line crosses the 50 level, bullish momentum fades. Also, we have a fresh bearish momentum when the RSI line is trending down in the range between the 70 and 50 level. But this is not always work in a real market. Hence, let's move on to the next topic, where we will show you our advanced strategies with this indicator. Here's Bitcoin, a 5-minute time frame. First, we should wait for the price to be overbought right at a key level of resistance. In our case, the price approaches the intraday resistance level right here, and we also have overbought conditions on the RSI. Then, we should draw a line at the recent swing low and wait for a breakout of it. As you can see, this happens right here. Next, we need to highlight the last bullish candle before the breakout. Note, if we have more than one bullish candle in a row, we must highlight them all as one area. With that, our next step is to wait for the price to fill in this area. Once this happens, we enter the trade short after the price breaks below this area. We should place a stop loss above the recent high and target 2 for 1 risk to reward. And, boom, the price easily hit our target. So, moving on to the bullish case. Before we continue, we want to recommend to you our trusted and transparent broker, known as AAAFX. AAAFX offers the fastest trade execution with near zero spreads and a deep liquidity pool, giving you institutional-grade liquidity. Moreover, the broker offers ultra-fast commission-free withdrawals within 12 hours. You can trade over 70 forex pairs with up to 500 leverage, over 10 global indexes with up to 200 leverage, over 100 world's major blue-chip stocks with up to 5 leverage, major cryptos, and major commodities with solid leverage and fast execution. Furthermore, AAAFX services are integrated with ZuaTrade, which allows traders to copy trade from ZuaTrade master accounts directly to your account. Finally, this broker offers a multiplicity of trading platforms, including MT4, MT5, and ACT Trader. So, click the link in the description to check it out. Here's $CAD, a 15-minute time frame. As you can see, the price becomes oversold here right at a key intraday support level. Next, we draw a line at the most recent swing high, meaning right here. Then, we receive a breakout above our line. So let's highlight the last bearish candle or candles before the breakout. So, step 3 is done. Now, we just wait for the price to fill in this area, and enter the trade once it breaks above the upper bound of the highlighted area. So, we enter the trade here, with a stop loss below the recent swing low, and 2-for-1 risk to reward target. Once again, the price easily hit our target. So let's move one step further and consider a more advanced strategy. Here's the TWT token, a 1-hour time frame. Our first 3 steps remain the same, but now, after highlighting the last bearish candle before the breakout, we must switch to the lower time frame. With that, we should switch to the 15-minute or even 5-minute time frame. In this case, we choose the 15-minute time frame. Moreover, the critical difference is that now we don't need to wait for the price to fill in this area. Even one touch will be enough. So, once the price touches our highlighted area, we must draw a trend line by connecting the swings along the top. We enter the trade on a breakout above this trend line, with a stop loss below the recent low and target 2-for-1 risk to reward. Once again, the price smashed the target. So, let's consider a short example. Here's the Microsoft stock, a 1-hour time frame. As you can see, the price touches key daily resistance right here and the RSI indicator is overbought. Next, draw a line at the most recent swing low. The price breaks this line right here. So let's highlight these 2 last bullish candles before the breakout and go down to the 15-minute time frame. Here's the 15-minute time frame, and the price pulls back right to our highlighted area. With that, let's connect swings along the bottom by the trend line. Finally, the price breaks below the trend line right here, meaning that we can enter the trade short with a stop loss above the previous high and 2-for-1 risk to reward target. And boom, take profit was smashed almost instantly. At this point, let's move on to the most advanced strategy for today. Before we continue, we want to share with you our top private indicator, QuantAlgo, which can be used in combination with previously discussed indicators or on its own. This high-quality algorithm, which combines complex trading processes to tell you when to buy and when to sell, was developed to enhance your trading experience. You can use it on any time frame for different asset classes. So, if you want to access QuantAlgo to get results fast, all links will be in the description and the comment section below. Without this algo will put you at a disadvantage. Here's Solana, a 15-minute time frame. In this case, RSI regular divergence at a key support or resistance level will serve as a trigger event for us. As you can see on the chart, the price action has made a higher high, while the RSI indicator has made a lower high, indicating a regular bearish divergence. Now, we draw the line at the start of the second divergence leg right here. As you can see, the price breaks below our line right here, so let's highlight the last bullish candles before the break. Now, let's move on to the 5-minute time frame. Here's a 5-minute time frame and we should wait for the price to at least touch our highlighted area. This happens right here, so that we can draw a trend line by connecting the swings along the bottom. We enter the trade short once the price breaks below the trend line with a stop loss above the recent high and 2-for-1 profit target. And boom, the price smashed our target. Let's take a look at the long example. Here's Euro ASI, a 15-minute time frame. First, we have a bullish regular RSI divergence at a key support level right here. Next, we draw a line at the start of the second divergence leg. The price breaks above this line right here, so that we highlight the last bearish candles before the break. Now, let's switch to the 5-minute time frame. Here's the 5-minute time frame and the price beautifully pulls back to our zone. So, Let's connect the swings along the top by the trend line. The price breaks right through it right here. So let's enter the trade long with a stop loss below the recent low and 2-for-1 risk to reward target. And boom, take profit was smashed. So if you are enjoying the video, leave a like on it and subscribe to our channel, as it always motivates us to release more new content more often. Thanks for your time, and I'll see you in the next video.